Okay, so the purpose of this video is to walk you through a sample profit and loss report for a service business, much like ours. Now, this is just an example business, but it'll give you an idea of how money flows into the company, what it gets spent on, and what comes out the other end. This will help you to have a better understanding of how this business operates. So let's go ahead and take a look at our sample sheet here. You'll notice that this is an annual report. It covers the entire year, January through December. And at the top, we have a section for income. And this is what we call top line revenue. Maybe you've heard that term before. But essentially what that means is all of the income that the company produced over a given period of time. In this case, a whole year. So when we go out and do jobs, complete those jobs, invoice, and get paid, every time that happens, that money goes into a bucket, we might call it, and that's our top line revenue. So out of that bucket of money, that's where we fund everything else that has to happen in the business to keep the wheels turning, to keep the doors open. And you'll start to see those things as we move down our sheet a little farther. The first section is a list of expenses broken down by category. And it might look a little different depending on the profit and loss report that you're looking at, the business that you're looking at. But in general, this top section of expenses is what we call cost of goods sold. And a good way to think about that is, what does it cost me to go out and generate $1 worth of revenue? So what are the things that I have to spend money on in order to even be able to do the work or deliver the product to the customer? So you'll see things on here that you're very familiar with, things like fuel for our fleet vehicles, chemicals, equipment rentals, small tools and supplies, whether it's a broom or a vacuum or a squeegee or a power washer, anything that we need to have to be able to go out and deliver our service to our customers, those expenses would fit within cost of goods sold. You'll see the biggest one generally is payroll for technicians or field laborers. This is where your paycheck comes from. So part of the cost of goods sold expense in a service business, or a big part of it, is the labor expense, your paycheck and the paychecks of the people that you work with out in the field. So when we subtract all of those expenses from our top line revenue, we have what's called gross profit. So when you look at that number, it's important to realize that that isn't money that we can just take and do whatever we want with. It's not as if the owner just takes all that money and goes on vacation or whatever, because there's a whole nother subset of expenses that have to be factored in. And that's what we call fixed expenses. And those begin down in this section. Now, these are expenses that occur whether or not we're out doing work, whether we have a job on the schedule or no jobs on the schedule. These expenses are typically going to continue to reoccur. So these will be things like rent for our facility, insurance on our automobiles, office supplies like ink toner and paper and stamps and things like that. There's a whole host of different expenses that would fit under fixed expenses, like subscriptions for our software, for like our CRM. That would be a fixed expense. Whether we go out and do any work or not, we're paying that bill. Now, usually some of the larger expenses that fit in fixed expenses would be things like administrative salary, office staff salary. So if you have a general manager or if the owner takes a salary from the business, that would come out of fixed expenses. So we total all of these up, and that's the total for our fixed expenses. And then we add that to our cost of goods sold expenses. That would be our total expenses for the company. And what's left is down here at the bottom. And we call that net income, or the bottom line. You've probably heard that term. And all that means is we take our total income for the year, subtract every expense that the business had that it was required to spend money on to maintain its operations. Whatever's left, that is our net profit. And that's a really important number, because that can be a barometer for the success or the health of a business, at least financially speaking. So typically, the bigger that number, the more successful and the stronger that company is. And it's really important for us to work at getting that number high. And why is that? Well, we do a few different things with that net income. Now, that's really up to the discretion of the owner or owners, how that net profit gets sliced and diced and used. But let's walk through a few scenarios. If a company is growth minded, if they're looking to grow year over year, then part of the way that you fund growth is by using some of this net income. Let's take a for instance. Let's say this company did $500,000 in revenue in 2017, and in 2018 they had a goal of doing $750,000 in revenue. That's an additional $250,000. Now, can this company just go out and do that additional work without reinvesting back into the company a little bit? Probably not. They're going to need an additional truck, maybe some more equipment, hire some more staff, a wrap on the truck or trucks. So there are things that they will have to purchase in order to be able to build in the capacity for that additional growth. So that's called reinvesting. And part of what this net income can do is it can be used to reinvest back into the company to up the company's capacity to do more revenue. So it can fuel growth or fund growth. Another thing that net income can be used for is to reinvest back into the staff. So for instance, things like our year-end bonuses and a lot of the perks and things that you have access to, those come from our net profit. If we implement any new programs, for instance, like health insurance or any new additional expenses that would be a direct benefit to the staff, that would generally come out of net profit. So that's another way that an owner could reinvest back into the company by way of reinvesting into his staff or her staff. Now, a third way that this net profit can be used is the owner or owners can take some of this money, or all of it if they choose, for themselves as a distribution. So that's just a fancy way of saying, I'm going to take that net profit and I'm going to take it for myself, turn it into personal income, and I'm going to use it for whatever I want outside of the business. So depending on the goals of the business and the situation, this net profit can be used for a variety of different purposes. Now, why is it important to you? Because you, as a production worker, have a big impact on this bottom line number. The way you go about your business can either detract from that number or add to it. Well, in what ways? Let's go back up to our cost of goods sold here. As you look through these things, you can probably realize that you have opportunities to limit the amount of money that we have to spend on some of these categories. For instance, small tools and supplies. If you take better care of your equipment, better care of your tools, and we don't have to replace them as often, that's money that we don't have to spend. And all of those dollars that we save, not rebuying equipment or replacing damaged equipment, flows down through and ends up at our bottom line and just makes that number grow. What about with our revenue? You have the opportunity to generate revenue. Now, the more efficient you are, the more productive you are, the more skilled you are at your job, the more revenue you can do in a given period of time. And oftentimes you can do more revenue without increasing any of these expenses. What does that do? That additional revenue just turns into straight profit and ends up growing this bottom line. So, by being responsible with your tools and with our consumables, by being as productive as possible in your work, you have a direct impact on the growth of that bottom line number. Why is that important to you? Well, a couple of reasons. We talked about reinvesting back into the company. Here at our company, that's a big deal, and we're always looking for opportunities to do that. So, the bigger this bucket of money at the end, this net profit, the more resources we have to reinvest back into the company. That means greater opportunities for bonuses and for programs that will benefit you. That means greater opportunities for the company to continue to grow, which is going to create more opportunities for your growth here at the company, whether that's through promotions or more work or more opportunities to take on more responsibility. The stronger and healthier and bigger the company gets, the more you stand to benefit. So hopefully you can see by running through this sample profit and loss report how your behavior and your activity can really strengthen our company from a financial standpoint. You play a key role in that. And so it's important for you to understand it and appreciate it and do your best to bring everything you've got to the table so that you can make this bottom line number as big as possible. The company's going to win. you're going to win. Everybody wins. So hopefully you found this useful and you have a better understanding of the way a small service business operates. And we look forward to teaching you some additional stuff along these lines in the future.